The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Technicians Hour, my pleasure to be here Monday through Friday, 11 o'clock till noon, right at this time. And the Dow is up 212 at 17,380. Got into that 17,300. That is really important. The S&P is at 2,044. The comp index is up 72 at 4912. Gold is unchanged at 1167. We've got bonds. Let's see, bonds are down 10-30 seconds. The TLT is down 27 ticks at 123.77. Bonds at 158. Very interesting. You got crude oil, it's up just a tad. The dollar is, in fact, up quite sharply. Now, this is the pattern that we've been looking at. Of course, thanks to our hosts from the previous hours, just great programming. We hope to keep that up all day. Now, let me look at this. You've got an interesting pattern here. You remember when I was talking about the pattern of the Chapman Wave Stork Leg Formation? Spent quite some time on it the other day. It's something you've really got to see. But imagine this. If you haven't got the chart on Tiger TV, what we're looking at here is, let's just open this up nice and big and you can see it. There we go. So the first one that started, I was talking about it and I said, way back when I was hand charting, I was doing this back, I think it was 1986, and I kept getting my ruler out and having to draw this line, vertical line, and it kept going up. I kept thinking, wait a minute, there should be a consolidation. And then finally there was a consolidation. All the consolidation was with the price point, the closing price of the Dow. So it was at a time where I just really discovered the Chapman Wave 7 waveform, I called it, going to a leg D. 4 higher peaks takes you to a peak D. And the leg 7 is the one that you got to be careful of. Well, it turns out that the vertical move kept going higher. Then it went in a not a rectangle fashion. It was an oblong shape, so that it went from a particular point that stopped usually at a C or a D, and then it went sideways with higher highs and lower lows, and then it started to contract and it made lower highs and lower lows, like an oval pattern. And I thought, okay, this is it, and then whoosh, it just took off to the upside, and that's when I saw the pattern would repeat many times over the years, and I called it the Chapman Wave Stork Leg Formation. One of the reasons is it looks just like a stork that stands with this thin, spindly leg, and then you got this rather wide oval body, and then you get the neck. Now, the thing I learned is that there's a difference between the fulcrum of the 1-to-1. That's the pattern that I drew the other day right here, where you go, it's like an A to B equals C to D, except that the difference between B and C is time as it extends sideways, not just a little oval pattern, but a circle pattern, but an oval pattern. And lo and behold, there's a spike to the upside of almost equal proportion, and there's certain ways that I calculated, etc. But this is different. This says that it goes to the body, and then it starts the neck, and the neck starts 1 penny, in this case 25 cents, above the body, and that was 1991.25. So here you got the low back in about the second third of October at 1883, round number low, and it goes all the way to 1982, goes sideways, and then it breaks out above 1982, and it starts what's called the neck. The neck sometimes is just real quick, and then it pulls back. So there's no real head. It's just like a neck and a reversal. Sometimes the head can actually start. In this case, what happened was the head formed another Chapman Wave Stork Leg Formation with a leg up, sideways body, makes the head, makes the neck, and pop. 2014 was a round number high. Pop, it goes to 2014, 75. Then all in one shot, it makes a Chapman Wave Rogue Wave, the head, the neck, and whoops, it comes all the way down to 1982.50. What I showed my subscribers was, I discussed this yesterday, And I mentioned, I mentioned this morning. Wait, where are we? Oh, and then there's a third one. We go to 1982.50 on the 14th of October, and lo and behold, it makes an arch formation. So yesterday I discussed this arch formation. What happens with the Chapman wave stalk leg formation is that the beak invariably goes back into the body, and depending on where it stops, certain things can happen. But when the beak is concluded, it gives a really strong upward movement, and then you're on your own. So what I said this morning, so here we go. Chapman wave 1980, 250, leg starts, Chapman wave stalk leg formation goes up, starts the oval, perfect oval pattern, look, higher highs, lower lows, and then all of a sudden, the oval pattern completes and it pops and makes the neck, but that's a peak C, and it pulls back, holds the left side body low of 2014-25, and what does it do? It pops one more time and it goes to a D. That forms the head at 2034.25. You remember that was yesterday at 2 o'clock when everything started to reverse to the downside. And it makes the beak, and the beak goes zoop down to 2007.50. So that takes me to this morning at about 6 when I was up about 5:30, 6 o'clock. So I started my newsletter, and I started it yesterday, but I continued my newsletter. And then I always send out the chart of the 120-minute chart plus the daily, sometimes daily, weekly, and 120-minute chart. And let me move it now a little bit so you can see the daily. And what I'd said was, when the beak completes, it usually has a very strong move to the upside. So far, it's just an okay move. And then I said, if the Dow closes, if the 120-minute chart goes above 2020 to 2022 resistance, that'll start another move to the upside. Bam. Here we go. We're at leg, I have to call this leg B. I should really call it E/B. Everything about it says I'm going with B right now. And that says that we should still go to a C and a D, and this is very positive. So I wanted to elaborate on that, on those particular aspects, because I discussed it in great detail over the past, I'd say the past 4 days, 4 or 5 trading days. Actually, it's more than that. It goes back to last week, Wednesday, I think it was, that I started discussing it. Okay, now what we're looking at is, let me run by. And another thing why I had said that we've got to be careful here, because we don't want to get too bearish. Now, it turns out that we have a bearish position here. One of those bearish positions that we have right now. Remember, CMG yesterday came out with earnings from the day before, and yesterday was the first actionable day. Well, it plunged down to, it closed on Tuesday at 705.60, and it opens on Wednesday at 650.61, goes to 666 round number high, and plummets down to 646.80. And it's trying to rally today and it's pulled back again. And one of the reasons is that my thinking here is that the whole food sector is looking, the restaurant sector is looking highly vulnerable. Now, I forgot that CMG's earnings were coming out. We had a fantastic, I think it was an 80 or 100-point move to the downside a couple of years ago when we timed it perfectly to short CMD just before the earnings announcement, and the earnings was just horrible, and it plummeted. Now, what we're looking at is something a little different. In the instance of the restaurants, we've chosen Panera to short, and Panera got smacked yesterday, and even this morning it plummeted down to the 200-period SMA, and that's where the fund managers really make a note. So it goes down this morning to 178.71. We shorted it at 193. That's a huge gain for a stock like this. I've got a one-to-one potential to the downside, but most importantly is that Panera and that whole food group. Look at this, Jack in the Box. Let's see what that's doing. J-A-C-K. Remember what I said is a little while back that we're looking at rotational aspects to this market. That's why you can get the healthcare sector. Look, IBB is still very weak, up a point today, big deal, at 305. but it's still very, very weak. Another stock we're short, way near the top. Now, this is an ETF, of course, the biotech NASDAQ ETF. But one of the reasons why I want to point it out is that H pattern that goes to a lowercase m is a formidable pattern, just like the stork leg formation. So it's going to make it really difficult for the IBB, even under the best circumstances, to smash through the 320, 322 level. At this particular time, it can rally towards there, but there's a lot of selling going on. I suspect it's going to take a little longer before you actually have a tradable rally, a counter-trend rally, before the IBB goes to even lower lows. So I just wanted to go through those things. And the other thing was the AZO. We'll look at that. This is the auto parts sector. AZO trading up 5 at 751. AAP is trading at 192. Just it's kind of stuck in this leg F, alternate count F/B, and leg. Is that, yeah, leg E in the weekly chart. Watching this really closely. We actually do have one in the group that we are short. I think we're still short. I have a fairly tight stop, like I think a 1%, maybe a 2% stop. We'll see. In the meantime, that's the way. But look at my Dow Quartet. And one of the reasons why, when I sent out my newsletter this morning, why I said, got to be a little careful here. You've got strength. Look at GE, unbelievable. It's at 29.56. It is, in fact, not a Dow, but a market leader at 9-year recovery highs. Look at this. 9-year recovery highs. 30.39 was the high going back to August of 2008. I would say that that's over 7 years, And it's amazing. And it's really helping the Dow. And you've got IBM, looks lousy, but in fact, having a little bit of a bounce today, up 195. But here we go, Triple M, oh my goodness, look at that. Triple M is spiking higher in E/A. E is negative, A is very positive. But look at this leg. See, I must tell you that the way the support levels have been holding, I'm becoming much more constructive on this market, looking out, so that testing of the Dow 15,370 low is going to take, I don't know what it's going to take, but it's going to have to take 3 to 6 weeks of persistent negative activity in the market to really reverse this market back down to the Dow lows. I don't know what's going to do it. Look at UTX. Well, I haven't looked at it today, so let's see what happens. Oh, look at that. Leg D, 98.85. Very strong move under the 100.06 repellent line in the 200 period moving average. That is good. UTX is still the reasons why my leaning is to say that we will be doing some downside testing in the coming weeks. But it is really constructive to see what we've just seen. Now, I'll be back and we'll talk about some of the things that might be the negatives here. And then maybe I'll talk a little politics. No, I'll talk about the politics of politics. I'll be back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. We're back. Dow's up 216. S&P's up 25. That's really interesting. The E-minis are up 30. The divergence there. Okay. This is what I had an email yesterday while I was on the show, and for some reason I just completely, I guess I was real busy with callers and stuff, so I completely forgot about it. And I love doing this. I love when IPOs come out. Actually, I don't do much trading of them anymore. I used to do quite a lot, just for fun of it, just to really test out the Chapman Wave methodology. So I have a 1-minute chart of RACE, R-A-C-E. Hey, what is RACE? It is the Ferrari IPO that came out yesterday. So I can't believe I forgot. So it opens at round number 60, round number 60 high, low round number 59. Remember, we always look at round numbers. And IPOs almost always come out first day, first opening price. Invariably, there's a round number because they get offered it. They don't get offered at $25.36. They get offered at 25 or 30 or whatever it is. So, okay. So it pops up quickly. It goes to 60.97. Not such a big deal. 60 point goes less than $1 higher. But then it slides. And that's what often happens. And it's only after the slide and a little testing that I ever want to start trading. But I don't need anything else other than just the Chapman Wave methodology. Look, it forms a little base here at 55.15, 55.16 at 10:03 in the morning. And then it starts peak A, B, C, D, E, F. And what do you expect at F? The MACD starts to turn down, stochastic turns down, and it pulls back from the, so it goes from, what did I say, 50, 55 level to the 57.20-ish area, pulls back to 55, to 56 round number. Then it goes peak A, peak B, peak C, peak D. And the D is already, the objective of the whole thing of the Chapman wave is to get you to a D. So I didn't trade this. I just notated it. Actually, after my show, I said, oh, it was, I just, at the time, I couldn't remember. I wanted to do it real quickly during a break. And for the life of me, I couldn't remember what the symbol was. RACE, R-A-C-E. And then it pulls back and it comes back down and it goes to the 56.14 level, 56.12 level. And then it starts A, B, and then it peaks C1, C2, because it doesn't get to a D, but it has a little double top there. Stochastic turns down, and you can put a plus sign here as if it was a down arrow, but you can't put a down arrow because it was a lower high bar that would confuse the whole premise of the Chapman wave methodology. Pulls back, comes all the way back down, no rally, no sustainable rally, and then all of a sudden, there's a high volume, just a huge high volume bar, as if someone's saying, you know what, I'm in. And it goes down to 55, back to that 55 area, round number 55. And then what does it do? It starts. This is the 1 minute chart. And it goes peak A, peak B, peak C, pulls back. And then it has what's called in the Chapman wave methodology an overlapping wave. What is an overlap? Oh, geez, this one take me years to develop. An overlapping wave is when it goes up perfectly to C. And it gets, usually it's got the Chapman wave squash pattern. This is the squash pattern between the MACD and the stochastic. And that takes you really quickly and very strongly to a C. And then it takes its time. What happens is it pulls back, and underneath it, it starts another, what we call a gray A. I'll just change that to gray A, and a gray B. It gives a signal to say, hey, I could have a turnaround right here. And it does turn around. And then all those letters, A, B, C, create, you know, when you're coming off the you're about to go onto the turnpike, right, or onto an expressway. So you've got your access road. So you go along the access road. This is where a lot of accidents occur. And instead of just keeping up your momentum and going into the lane, of course, you've got to slow down a little bit, because this might be the lane that is not a separate lane, but it could be a lane that quickly joins the main highway. So you've got to, Ferrari, perfect example. So you put your foot in the gas, and as you go, you're coming in from like 30 miles an hour, 35, 55, 65, and you're with the traffic. That is an overlapping wave, because it takes you from a C that became like a C minus to an inner buy signal, A, B, C, hasn't taken out the high, in this case, the high of 56.15. And then together, the moment it takes out first the high of 56 round number, and then the high of 56.15, that becomes an overlapping wave and usually takes you much higher, because now you're with the traffic, the speeding traffic. And it takes you much higher than C, and it takes you to a D. After D, invariably, you're going to come back and test your breakout point. Geez, it did exactly that. Then it started another buy mode that went to peak A, B, C, still hasn't taken out that D, and then it fails, and that becomes a C minus. And then you get a diagonal target line that takes you to where, bam, right there to the most recent lows of 55, again, round number, and then it spikes up today and goes peak A, B, and then it goes to a C. Look, there's an overlapping wave again, goes to a C, and the high today is D at 58.20, and then it pulls back sharply.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Folks, we're back. So I had a bunch of things going on. Let me see if I absolutely have to get to the Raytheon chart, but also quickly XLF, a nice candle today, trying to get to the 200-period moving average. So far, it's considering that it's a 94% stochastic and the MACD is very strong. This is just okay action. But in the weekly chart, I would have to say that the breakout, if tomorrow the XLF, the financial S&P Spider Fund, is at 2382 right now. If it's anywhere in the 24, it's a big move, huh? 2410 to 2420 area, I would have to say that has to be considered at least a bullish confirmation of the MACD and stochastic being strong. The weekly chart technicals are still very, very, very poor. And it's that aberration of the August 24th that has really distorted a lot of the technicals. XLE, I was just asked if I would look at it. Sure, I'll look at it. You remember yesterday we had a call and I said, yeah, I can see it moving up a little bit, but it has to close lousy yesterday. I said, if it closes up today and by, that's today being yesterday, and tomorrow being Thursday, it was above the 6808 level, I'd say, hey, that's good. Now it can start its move to the upside. So far, this is just, so. It's not great. Now, a couple of questions I had in the den and a couple of questions I had as well here. Remember Priceline? Priceline, I said, had a target of 1395.01 to start leg D. It's trading at 1368. It kind of stalled. I don't know if earnings are out or have been coming out or whatever, but it didn't respond all that well. It made a leg E. This is a peak E, but it's a high-level consolidation. I still think that somehow or other it will make that leg D, maybe dragged up by the market or whatever. But in the meantime, if it fails, if it closes at 1368, if it closes under 1347 in the next 2 days, and then by next week starts to go to below 1330, that'll be very negative action. So far it's holding okay. It's not participating as well as it should. It really should be at the 1395.01 level for leg D, at least by Friday. That's that. Now let me go to Raytheon. The reason why I wanted to go to Raytheon is that earnings came out this morning. They were positive except for one outlook that was behind. And I'm saying to myself, wait a minute, let's look at this chart. Raytheon, I always look at Raytheon. I've got a really good friend. This is just, to me, this is so fascinating. This is the politics of politics. I'm not talking, I don't want you to vote for anybody based on Raytheon. I don't want you to do anything about voting. It's got nothing to do with that. I want to talk about the politics of politics. So this friend of mine, brilliant, one of the most brilliant guys I know, just, you could mention anything about anything. You could talk about Wagner's Tannhäuser and just some obscure thing. Oh, he said, oh yeah, that's right. And then when and you start talking about all these different things, you talk about it doesn't matter. Okay, so he's one of the really good scientists. I have to always laugh. He is the peacenik of peaceniks. He is the guy that, I mean. He's a gentle character most of the time, a very gentle character. And he has a stock that since he's been there, since he transferred from one particular company over at Draper Labs here, and I think it was Draper, somewhere around there, he went to Raytheon. It's gone from, I'm guessing now, let's say from the mid-20s to an all-time high today of 117. This is Mr. Peacenik. I love that. When I see that, I say, that's the irony of the whole thing. But actually what he works on is the radar, the system that really, the protective shield, etc., stuff like that. So it's kind of fitting, right? So this is the politics of politics. When President Obama, when Obama became President Obama, many of us thought, uh-oh, could be a problem for the defense stocks. This is not defense in Procter & Gamble. This is defense in the real thing, the defense of your country. And I also thought, this is, I've never heard him talk about the stock market. He's been very not anti-capitalism, but anti a number of things that are directly involved in the stock market. I thought, geez. So here we are. We have the politics of politics. The person that, in a sense, seemed to represent peace, got a Nobel Prize for peace, right? You're looking at Raytheon going to all-time highs. You're looking at the stock market. What are we now? We are exactly 1,000 points away, less than 1% from an all-time high in the stock market. I mean, I love that. So that's why I jokingly said months and months ago, I said, wouldn't it be interesting if the person that represents, I'm not going to mention names, but the person that absolutely represents capitalism to a T becomes the captain of the ship as the ship changes course. I mean, this is the way things work in nature. It's so funny how that works. I'm not predicting. My predictions will come very soon. I've already started the whole prediction process, which is what I always do at every election. But that I'm going to set aside for now. I just wanted to talk about Raytheon. Irony of ironies, isn't it? So it's just funny the way that works. So yeah, I am talking politics and the politics of politics, but also mostly politics. In my thinking, I'm saying to myself, it just wouldn't be right if after 8 years, a Republican came in as, just like with Clinton, when Clinton handed the market to Bush, no one ever talked about it, but in fact we had started the crash of 2000 was that Clinton to Bush? Yeah. It started a year in the final year of the Clinton administration. Isn't that interesting? So I'm saying to myself, wait a minute. It just wouldn't be right if we start a massive down move and then the Republicans only get one term. That doesn't seem to be the right picture. The right picture would be for a Democrat to get to the market if we are going to make a major, I really mean a major top that gives back huge chunk of the gains that we've made over the past number of years. So that to me is the politics of politics. Just the way nature in its wisdom, nature of course being us in this case, chooses to be looking at something when something else is happening. And that's the whole thing about politics. If you see them waving, let me do this, can you see it? Yeah. If you see them waving their hands on the right hand, please take your time, see what's in the left hand. You know, that shell game that people that used to be when you went to Manhattan, you'd always see outside, you could get outside your stop, train or bus or whatever it is, and right there on the street corners, these guys were doing the shell game, and the P looked like it was exactly in that shell. You could have put your house on that. You would have bet everything you had. And it's not there. It's in the other one. Well, politicians are really good at playing the shell game. So whatever becomes the focus, look elsewhere because the real focus is somewhere else. All right, so we're back to our story. So now to add to GE, I haven't looked at it today, but Cintas, CTAS, was making higher highs and then broke out, and the weekly chart had a pattern that said, gee, this could be a G, this could be a letter G, or it could be a B, alternate count. B is very positive. I'm looking at the monthly chart, G/C, Cintas core, overalls, clothing, rentals, all sorts of things that really pertain to the core of the economy. Well, it made an all-time high, and now it's just kind of stalling. I'm putting this on my radar. We haven't got any position. I was thinking that we should have a position because it's done so well. But in the meantime, it's almost at highs. I don't know if I'm going to be buying it. And I do my analysis and it says, hey, this is going to a C, a peak B, and then a C, then a peak C, and then a D, and that's like no less than 4 weeks out. And that's when I'll have to look at it closely. But look at the MACD, very strong. But the technicals in the weekly chart are either really strong because they are just breaking out and have a lot of room to go to the upside, or they're saying, hey, there's a divergence between the price and the technicals. And this is always very difficult. And you usually have to use a shorter time frame, in this case, the daily chart, to assess whether or not the weekly chart is going to improve even more technically, or whether it's telling us to be really careful. So, and there's another thing. If you want to call it this an expanding wedge formation, now I say it's an oval pattern in the stalk leg formation. It is absolutely not a rectangle. But in some ways, you can make a case that there is, in fact, Chapman wave stalk leg formation right here. Of course, you have to be doing a lot of chart work to be able to. It did take out the low, and that's usually an absolute no-no, that low of 79.51 in the oval formation. But I'm going to put that in because it really has a look of a leg, a body, the neck, and we'll see what happens here. And the reason why I fuss about just a couple of stocks, a handful of stocks, like a Harley, like a UTX, and like a GE. Now it's just made a new recovery high, so that's hardly likely a G. That could in fact be a B. So this is very good action that we're looking at today. And then back to CTAS. So these stocks are all telling me stories, and we're going to be looking at it very closely. Now let's do something else here. I wanted to look at we've got Jennifer in Wellesley. Jennifer, how are you?
Fine. How are you?
I'm very well, thank you.
Good. I'm interested in Visa. They're reporting next week, and I don't know whether I've got a small gain. I don't know whether to stay in or to get out before they report.
I spent a little time. Actually, I went through all the Dow stocks over the weekend, and I was so surprised. Look at this. McDonald's. Now, this is what I want you to talk about together with Raytheon. I wanted to put in McDonald's. We've got this Whole Foods, the genre of health in the food area is trading at going to Lowe's, that is yearly Lowe's, and McDonald's is going to an all-time high. The health food of McDonald's is surpassing the terrible food of Whole Foods. Isn't that ironic? Of course, that's the opposite of what we usually talk about. So I'm looking through these things and I'm saying something's going on in this market. The majority of my Dow stocks that I'm looking at are actually quite good. And then suddenly I say, oh, that's right, I almost forgot. Visa and MasterCard are part of the Dow now. And look what happened. Visa is trading at 76.42. The high was just 4 days ago at 77.32. It looks really good. The MACD's at 88%. Sorry, the MACD is strong. The stochastic's at 88%. The weekly chart has this pattern that was really disturbed by the August 24th spike to the downside. And I don't know whether to consider that that was an aberration. This is a brand new move to leg B, and that it failed at a G the other day in the weekly chart. So I'm going to answer your question very, very succinctly and very quickly. I'm going to say to you, I don't want to overthink this. Visa is obviously in the right area for this particular phase that we're in right now. I would do one of two things. I would, on some part of my position, I would have a trading stop, and that trading stop at this particular point, I'd say 75.41. A little part of it would have a trading stop just under the low of yesterday, 75.31. 75.30, just a little bit to take off in case it turns down here, but in C, it should go to leg D. What day is the earnings report?
Next Wednesday.
You know, I'm going to make, it might be difficult to do, but I'm going to suggest, if it's possible, to hold it into at least Monday or Tuesday of next week. And then on the day, the earnings come out, I think Visa comes out early morning, or does it come after the bell?
After the bell.
It's after the bell.
Yeah.
I might say to you, you know what? Before the bell, take something off. Why? Because if it spikes up sharply, you've still got at least the bulk of your position. And if it drops, you've taken off some to reward yourself. You've got a little bit of cushioning. But I'm also going to suggest, Jennifer, I don't know if you have time. I don't know if it's even possible. But if you're able to call me A, B, C, D, E, pulls back, A, B, C, D, pulls back, A, B, C, it should still try again for, the high. So if you're able to call me, today's Thursday, if you can call me Monday, and if you can call me Wednesday, let's follow up on this, and we'll try to handle the trade as we go into that earnings. And sometimes what we find is that stocks rally sharply into earnings. Earnings come out and then they decline.
Right.
And sometimes they react. I've seen stocks. This is one of the few times actually I've seen this number of stocks, not in the last 2 weeks, but up until about into September and the real beginning of October, there were so many stocks that really collapsed on the way down, and then earnings came out and they just spiked to the upside. So let's do this. Keep that in mind, that it needs a leg D in the daily chart. And if it goes above 77.32, I don't want to see it go to 77.34 and then close at 76.90 and then the next day come down. I would prefer that if it goes to 77.33 in leg D in the next 2 days without taking out, say, 75 support, I would prefer that you raise your stop on a tiny position, just a little bit, to say that I'm controlling the stock, it's not controlling me. Okay, do you have time to hold on?
Yes, I do.
Because I'd like to look at it together with MA, which is MasterCard. So we're on with Jennifer in Wellesley, Mass. And MasterCard's also...
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Up next, the Diagnostics Trading Hour with Daryl Martin here on TFNN.
Hi, folks. There was a question I was asked if I was able to stay for another hour to do Daryl's show because he's out. You know what? I will. And in that time, I will do a little bit more work. I had a question then about the S&P. Well, could I just do an analysis and give parameters? I'll do that in the next hour. So, yes, I will stay. I'll do Daryl's hour straight after this. And we're on with Jennifer in Wellesley, and we're looking at MA, which is MasterCard. Oh, I typed it in there. That's where it went. MA, which is MasterCard. And MasterCard is not as, well, how can I put it? MasterCard is acting very well, but I think, let me just do this quickly. I think Visa has a slight edge. And one of the things about Visa is that if you look at the left side, right side price time match of the cup formation, it's really quick. If you so MasterCard should be the same. MA. Oh, I keep typing on the chart. I want to type over there. MA, and now I want to go to Visa. This is Visa. So MA. Yeah, you know, it's kind of tough. I just think that the technicals on Visa seem a little bit stronger, just a little bit stronger than MasterCard, but they're working together. You know, we've seen times before where they went in divergence. This time they're working together. I like that. So here's my recommendation, Jennifer. I think, first of all, congratulations on having the position. It's a great position to have, number one. Number two is I would put just on a very small position. I'd try not to get out of that small position. If you don't have a very big position in any case, then sometimes you feel like it's a bit of a waste of time taking something off and it gets complicated. But I'd be a little concerned if by Friday or Monday, if it suddenly closes under, say, 74.90, somewhere around there. But most importantly, it should go to a D in the way I've got the notation at this point, because this does look like a new buy mode based on the 29th of September rally. So yeah, we are. I'm saying to you that I think it's going to go to 77.33 for leg D or higher. And at that point, then I would say that in one little part of my position, I just want to put a stop in, a trading stop. You can make it even tight, a dollar or 80 cents. Take it out, it's fine. You've got the benefit of the whole move to the upside, to the leg D, and then the rest you want to hold. And if you're able to call me Monday, we'll look at it again. And then we'll do the same thing on Wednesday. It's these are two stocks that are very important to the whole economic scenario. They're acting very well, going to all-time highs. So I like them. You're the one that got into the trade. I don't want to micromanage your trade. I just want to say to you, it should go higher. That's based on the Chapman wave methodology of the legs in the daily. And let's look at Monday and Wednesday. Is that okay?
That's fine. Thank you. I will try and call you next week.
Now, I'm trying to think. There was another stock that you called me a number of months ago and was doing really well, but now I can't remember what it was. Do you remember?
I might have called you on Biogen.
Biogen. Yep, I think it could have been Biogen. Yes, it was. And I remember. And I said, be careful.
Yeah.
Good. I said to myself, I remember Jennifer calling. I remember as I went off the air, I said, did I say be careful? And I think I remember I said to you, be careful.
Right.
So, all right. So, great. If you can, call Monday and we'll speak to you Wednesday because we want to follow this right down to the wire. Thanks for calling, Jennifer.
Thank you. Bye now.
Pleasure. So, folks, let's do this. I will be doing the next hour. I'll have to just make some quick calls to change a couple of things, but that's okay. See, the VIX is holding. It's down $1.59. It's still at 15. This is still quite high, actually, considering where the market is. So in the next hour, I'll do a little bit more work. We'll talk about the S&P. We'll talk about the VIX. We'll talk about a relationship. We'll talk about this relationship right here that I showed my subscribers, that there's a chance, unless we break out, there was an arc formation in the 120 Dow and 120 volatility index. So we'll talk about that as well. I'll be back in another few minutes. Stay tuned. And thanks for being here. If you can't, check out my opening call. I think you'll find it very interesting. Be back in a few minutes.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.